All right, welcome back everyone to another video of some stock analysis. So in this video, we're going to go over Zillow. Please subscribe if you have not already. I see you subscribing. I'm so thankful and so appreciative of everyone that does listen and subscribes when they start watching these videos. So please consider subscribing. Now let's get right into it. I've already done a Redfin stock analysis, so I thought why not do Zillow as well, because Zillow came out with earnings recently. So far today, Zillow is up 14%. As you can see, today is February 11th, 2021, and they're up 14% because they had such strong earnings. And it's at $188. Now, the analyst price target looks like we have one buy and two hold. So the price target average is $168, which is about almost an 11% downside from where it's trading right now. But we can also see that the high is expected to be around 175, so Zillow has already blown through the high. And if we see some stock analysis, the analysts think that Zillow is going to be a 10. It's rare that you ever see a 10 on tip ranks. So, tip ranks analysts are not, well, the analysts on tip ranks, or that are reported to tip ranks, think that this is going to be a 10. So that's really good news. This is a really good internet play for real estate. Now let's get right into the fundamentals of Zillow. Zillow at the end of 2019 reported 2.7 billion in revenue. That's double what it was in 2018. This is what we want to see. Look at this growth. Every year, Zillow has had top line revenue growth. That is what we want to see, especially it's doubly enticing to literally double your revenue from year to year. So I'm not sure if we're going to hit, 2.5 billion in the next for the whole year of 2020, but hopefully we can see some, again, positive numbers given throughout the year. Now let's see what its total net income is. Net income was about $305 million loss. So it's actually growing. That's the biggest loss, the most they've had for a loss in its history, and it doesn't look, I mean, it's been pretty spotty. It's been all over the place. So that's not the best. But let's see, why is that? Let's get into some things. Let's look at the balance sheet. So as we can see, this is actually a huge advantage to Zillow, is that they have at the end of 2019, they had $1.1 billion in cash. Hopefully that got them through the pandemic. You can look at the quarterly numbers on your own, but right now we're just going to go through the annuals. So 1.1 billion, that's again a double of their cash pile just about from in 2018. That's a really good thing to have, is seeing a double of your total cash on hand. And the total working capital, which is current assets minus current liabilities, we can see that, again, it's pretty strong. 3.5 billion in current assets and 920 million in current liabilities. That gives you a lot of wiggle room to, go through something like a pandemic. So that's what you want to see. That's a strong, healthy financial company when you see that they have a very good positive working capital. Let's go down now to total liabilities, and we can see total long-term debt is about 1.5 billion. This is what we do not want to see, is every year Zillow has grown their debt. Why? What is the point in this? Like, what is the point in growing your debt to 1.5 billion? And this is one of the reasons why I really liked Redfin over Zillow, is because of something like this. Why can't you just eliminate this or get it to be halved, or, two-thirds gone when you have 1.1 billion sitting in your bank account? Why not just get rid of the debt? What is the point in holding this debt? So the only thing that I can think of why that might be a reason of, 1.5 billion in total long-term debt is, let's look at the cash flow statement. Cash flow statement, we can see all the investing and financing activities. One of the things that I want to see and I always look for is how much was repaid in debt and how much was created. Let's just look there first. So long-term debt, they issued 1.8 billion in 2019, and then they paid off 113 million in 2019, which is how we got the number that we saw on the previous page on the balance sheet. Okay, so why did they issue 1.8 billion in debt? That seems like a lot. And there's no real good reason other than, again, this is from investing activities, or sorry, from financing activities. So they're obviously doing this for some reason. They're gearing up for some reason. They're probably making internal infrastructure changes and trying to enhance something, maybe like on their website for users, or maybe on the back end for something like realtors. Either way, it doesn't really make sense because in 2019 they didn't acquire any companies. They barely acquire companies as it is. So how is it that they spent 1.8 or they issued 1.8 billion in debt, long-term debt issuances? So that's just something that we want to keep an eye on. And again, that's different from equity issuances where they, had issued more sales to the, or, sorry, more shares to the market. That's different. So that's something to look into. If someone could comment in the comments below, what do you think Zillow did to create 1.8 billion in long-term debt in 2019? Why did they do that? And when you get back to me again, please just comment below. Now let's look at a portfolio of Zillow. $10,000 from any time that it was out there until today with no rebalancing. Let's look. So Zillow has actually not been around that long. Zillow has only been around since August 2015. That's when it IPO'd. And then the data that we have goes until January 2021 using the portfolio visualizer backtest. So when we look at that, your $10,000 back if you invested at the IPO in August 2015 would now be 55,000. CAGR about 40,000. Not bad. Not bad at all. It could be a lot worse. But if we look at the individual years of returns, Zillow has had double-digit growth except for 2018. Towards the end of 2018, around November, December, we saw a stock market fall, and that kind of ended the year on a bad note with stocks in general and the indexes. So Zillow is definitely a victim of that, most likely, is what I'm going to guess without knowing any news stories from Zillow from 2018. Other than that, though, what a solid investment this looks like. Double digits, and then in 2020, just 182% because everyone, as you know, the housing market just went berserk and everyone's online because of a pandemic looking for houses, and realtors are trying to grow their business on Zillow. So anyway, that's all I wanted to go over today. If you did enjoy this, please like it. And again, please let me know in the comments what you think that $1.8 billion in long-term debt was. Thank you again.